Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, September 18th, 2018. Quick update on the U.S. equity markets here. Not a whole lot new to report since yesterday. Did the last video, started it and wrapped it up just before the close yesterday. The levels I highlighted, I want to go over those and then look for what levels to watch today. So this is a SPY 15-minute chart. We were right here yesterday when I did that video, and highlighted this level. 289.40, favoring a reaction off there. Looking for the QQQ and Q to go down a little more, complete some unfinished business, hit the support level I was talking about there, followed by reaction. So we both happened. Q's actually did it in after hours session. I'll show you that chart in a second. But so there it is. There's a typical reaction off the what I'd say the initial tag of resistance from above. Not the first time, but the first time in a while since we broke down from this level. So we're a little bit above. I've added a couple lines here. 290.13 we popped so far on this opening candle this morning. This is this morning's opening candlestick. So there's a follow through the reversal yesterday after we printed a close just under that level. And again, I expected a recovery after a brief dip down there. Now, where do we go from here? 291 is the next resistance. You have a reaction here. You have a gap right here. You have the reaction high, of course, right here. If we get there, we're might as well pop up and make new highs because we're going to be close to it. So let's see what happens. If that does happen, if we come up here and SPY, and I should say more of my focus now is on QQQ, but SPY is still above trend. SPY is still holding, so that's the only thing giving me pause. We look at let's look at the daily chart here. Here's a daily of SPY. We do have the big divergences I mentioned before, but we have this minor uptrend line that comes off the June 28th lows right there, a couple candles there touching it, another candle, and some candles here. So SPY, like I said, continues to look better, much better than QQQ. And so this is a trend line to watch as far as a daily chart right now. We want to see that go. And let's see on the 60-minute chart, don't have much there. Let's just focus right now on this 15-minute chart. So pretty much a reversal at some point today, and the next sell signal will come on another break below 28.40. You might now want to go for a break below this reaction low. That I think would really open the door for more selling and a move down here to any of these two support levels. Okay, and QQQ. Only thing I've added is this little 15-minute divergence right here, bullish divergence there. So QQQ, we were right around somewhere in here yesterday, and I said I expected that to go down to this 180.52 support level, pretty well defined before with a reaction off there. It actually happened after the bell. It happened in after hours trading. We hit a low of 180.33 before reversing, and that's the thing too. That's why I like trading futures. QQQ you can trade after hours, but number one, you cannot put a stop loss order. Only limit orders in after hours trading. So with NQ, you can go to bed at night, put your stop loss, and know you're going to get so much liquidity. It should be filled with a good spread, and then know that you're not going to wake up to a gap. That's the thing about QQQ. I've seen QQQ gap up and down 2, even 3% when volatility gets really high. And gaps will bypass a stop loss. They'll bypass a stop limit order, and they'll trigger a stop loss order to fire off at the open. So you can exceed your position, your stop by quite a bit with gaps. Now that didn't happen today. There wasn't much of a gap. This is just a continuation of yesterday, but again, looking at futures or after hours trading, which I don't have on after hours on this chart. I'll show you futures in a second. It's like using X-ray vision. So basically, like I said, that 180.52 was fulfilled. We got the tag, and this is the expected reaction. Now, where do we go? That's the important thing. That would also allow you, if you had a short on QQQ or the NQs, you could have covered there. But uh, 182.65. That's resistance. We're testing it right now, give or take. There was a little bit of reactions above there, but that's resistance, and I'm favoring a reversal here. This is what I'm okay, excuse me. So favoring a reversal here. Next level, and I would say at this point, I don't call it my uppermost bounce target, but 183.69. To keep the bearish case intact. I'm talking about on the daily chart, that recent back test and rejection off that uptrend line. Ideally want to see this thing reverse here about 183.70. And of course, these are other resistance levels, but So this is what I'm favoring now. Um, Something else to note, besides the increased volatility, or at least what I expect to be increased volatility due to the S&P 500 sector changes coming into play this month that I've mentioned before, we also there was a article out in the Wall Street Journal. I posted that in the trading room today. How 20% of the companies in the S&P 500 are already on their blackout period. And what I'm referring to is there are restrictions around surrounding a company's earnings report. So as we head into Q3 earnings here, we already have 20%, and I think it was, if I'm going from memory, I think by October 5th we'll have like 86% of companies in blackout. And that's what's buoyed the market up quite a bit. Particularly big companies like Apple have had tremendous buybacks and all that. So that should most likely add to volatility. It also plays into that, the scenario that we break down those daily trend lines and the weekly trend lines and maybe get a pretty hefty correction here coming in the fourth quarter here coming up soon. Okay, so either way, those are the areas I'm looking for a reversal there. So the sooner the better. Like I said, if we can reverse here. So let's look at the NQ while we have this up real quick. NQ, there it is. So there was NQ somewhere around there yesterday, and that was at 74.37-ish level I was looking at. And you can see, so we went on just like QQQ did after the close. NQ went down, hit it. So that's fulfilled. And again, that was a pretty significant support level. Lots of reactions recently, reactions back here, reactions here, reactions here. So we got a bounce, but just like QQQ, we've now bounced back to resistance. So again, my preferred scenario would have us reversing here and uh, and then coming on down. And if we test that level again, we're probably going down through it. Here's that uptrend line shown on the 4-hour chart, 2-hour, I'm sorry, 120-minute chart all the way back to early April lows. Still a breakdown, a little brief recovery, but again, when you look at the daily, it's simply a back test really. And we're still below it, but I also drew this trend line here yesterday. We have this little minor trend line if we look at this at QQQ. So what you want to see is pretty much yesterday's lows go, or that not just yesterday's lows, that level I just said a minute ago on the 15-minute chart, this 180.52. You want to see that go with conviction, and that would most likely open the door for a next wave of selling. Meanwhile, we do have these divergences on the 15-minute chart. Maybe they have a little more to play out, so trading could be sloppy here. If we get above there, we may go in here and could trade sideways for a little bit. But either way, give you the levels to watch. So I think it's objective to short here, or yeah, I wouldn't take a long. That's just me. But if you want to take a long on a break at that level, maybe you run up here, up here, up here, and who knows, go on to new highs. Because as I said, we still have the SPY holding support, and then what I really, really want to see to firm up the case is XLK. Sorry, I had to pause the video there again. It's been a morning of distractions. XLK, this one I'm really watching here. That trend line there and the rising wedge on the daily, and another test of support so far. Reversing today. So this we really need to see that go to help put the nail in the coffin. And then the other big one I've been watching recently was Amazon, or is Amazon, and on this one. So yesterday we had a breakdown. It looked pretty convincing, pretty solid close, and now we're back testing. So this will be key right here to see, will this back test, will we get a rejection? Will we back test for a few days? Will we regain the trend line? But if you start to see Amazon roll over, and I'll keep it simple, guys, take out yesterday's lows, I think that puts a nail in the coffin for Amazon. I think it give you uh, the next objective short entry on Amazon, and that would also, of course, have implications on QQQ as well as the consumer discretionary sector. Okay, let's keep this one brief. We'll wrap it up here. Again, we just have to, this is sort of a wait and see day. Okay, there's Amazon as I'm clicking around here on a 60-minute chart. Had a support zone here, and so far it ran it yesterday briefly, but it's holding it right now. It's actually moving back up above that level. So that's another level to watch. This would probably be comparable to that daily trend line. If I put it down here, somewhere around there. So there's Amazon. If we close, if we move up another 2-3% on Amazon, we're going to be back above that daily trend line. and then that breakout, yesterday's breakout, would prove to be a false breakdown. And again, I just have to reiterate with the shuffling around in the sectors right now, and Amazon's a big one. That has a big change coming. It's being moved out of the tech sector into, or out of, it's going into the new communication services. No, I'm sorry. No, that one's going into a different sector. There's a lot of reshuffling. Bottom line, I can't remember who's going where, what weightings, but there'll be a lot of selling. Amazon, Apple, a lot of these big tech companies coming up here. So, all right, let's watch those levels, and if anything significant happens today, whether it's to the upside, downside, I'll report it. I suspect if we don't break those support levels down below, or really rally up, if this yesterday's move wasn't just a brief fake out and we close up strong today, then we'll probably get maybe a day of consolidation today. I could see that on the charts looking at QQQ, some more of this sideways consolidation, which is frustrating, but and then again, be prepared. These are the levels to watch. Here's that minor uptrend line on QQQ. We're at resistance now, with some resistance all the way up here. And that would again be the, I hate to use the term line in the sand, but for the bearish scenario, really would help to see QQQ remain under 184.86. Otherwise, I think that opens the door for new highs, and then a break below 180 or so would really open the door for what I think it would be more of a waterfall, very fast sell-off. All right, we will wrap it up here. All right, guys, this has been Randy Finney with the right side of the chart. Hope you enjoyed it.